Two roads diverged in a wood, and I took the one less traveled by. And that made all the difference. Robert Frost, the lower class has now become the homeless class because they can't afford housing. And the middle class is now the lower class. The rich got tons of money right now, folks. Housing in my area, and I've talked about this in other videos, went up at least 44% overall when we look at the housing market across the country. In the last 2 years, it's ridiculous, skyrocketed. It is really going to be a tough time for the U.S. consumer over the next 18 to 20 months, in my opinion. 2023 and some of 2024 is going to be a grind, ladies and gentlemen. We are going to feel this for a while. It's not going to be over in 4 to 6 months. You know all the money that we have given away to people and corporations, and we destroy demand and take, the incentives for demand to go away. Consumer confidence is starting to turn. So the NASDAQ is in a bear market. The S&P right now, it's flirting with a bear market. Meanwhile, we're waiting for the CPI to downtick. We should be talking about PCE, but we'll leave the CPI. Inflation really hasn't done that. So that is taking a lot longer to roll over right now. Separately, jobless claims are up, which means companies are beginning to affect layoffs, so unemployment rates will start to go up. And meanwhile, we are fighting a proxy war in Ukraine and Russia and wasted $100 billion. The jobs report just came out today. Oh, yeah, it's great, 3.5%. Millions of jobs are being lost right now, folks. So you're going to see, in my opinion, a Fed funds breach the rate of 5%. I think the silver lining is we're starting to see maybe a bottom in the equity markets right now. So, in my humble opinion, this madness is just starting. For all of us, we remember that living through the 2000s, I was working for .coms in that day. This was, it was 4 years of sheer madness and a grind. Now we have 31 trillion that we have to work through. We have to work through that. The economy, a recession we have to overcome, a war we need to end, and people all of a sudden assume that, hey, 2 or 3 rate hikes and 5 or 6 months of headlines, we'll be okay. That's enough. And then we'll go back to normal, print that money. It is probably going to take 3 to 3.5 years of slow, meticulous, running off of money and not reintroducing any new money. That's the key. That may mean the bottom does not happen for 18 to 20 months, folks. So I think we are in for hell on earth market action right now. I don't understand why anybody would give up their liquidity in this moment right now. Why would you give up $50 to $100 million in cash if you had that in the bank right now? However, I think multifamily is going to be a good investment, and certain sectors of the housing market for housing is going to be good, 100%. The thing you have to do before you talk about what is happening now, I think, is probably useful to go back, to take a look at the end of the great financial crisis that we went through back in the day. We all remember that hiccup. And the reason is there's a bunch of people, from my readings, coming out of the GFC who confused what the U.S. government and some European governments were doing at the time. There was a risk of a huge financial contagion. And so the U.S. stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets. And the ECB did that. Even Japan did it as well. I mean, look at Japan's balance sheet is off the charts. I did a talk on this a while back. And then there was, this body of these experts, these pseudoscientists, these economists who coined this thing called modern monetary theory, which said you can keep printing money and introducing it into the economy to even things out, to actually drive long-term growth. It's wonderful. It's this new thing. We're just going to buy some printing machines. And it turns out a bunch of government officials, bottom line is, they fell for it. That's actually what happened when I was reading about this. So if you fast forward now to 2022, 14 years late, governments around the world have printed something to the tune of, I think, $30 to $35 trillion of money into the economy that should have never been there. Should have never been there. So, the thing to remember is we have not necessarily just been obfuscating true supply and demand. In the last 8 months, we've been talking about recession or inflation. We've been transitory. We've, been actually doing it since 2008. It's just that it has been building up in the system. So one of the things we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form. We never stopped printing since 2008. If true economic equilibrium is meant to be found, we have to stop printing. What is true supply? What is true demand? In the absence of government sloshing money around trying to prop things up that should not be propped up, or buying votes, or all the gifts these folks have engaged in the last 15 years have to get undone. So that is, we've kind of look at the back of this, what has to be done if we want to move forward. So if you think taking 31 trillion out of the economy, you're talking about, I think it's about 86, 87 trillion in the world. GDP is 86, 87 trillion. So it's almost half of the entire year's worth of the global GDP. It is going to take 3 or 4 years of slow, meticulous running off of this money and not reintroducing any new money, folks. So it seems we are at the starting point of something that is going to be a long, arduous process. And ladies and gentlemen, that is separate whether we are in a recession or not, right? That is just the bear market we're in. And so you have to look at asset prices today as a microcosm, a much larger trend that has to, be about fake money pushing asset prices up, and now talking, you're going to have to take that fake money out and finding out what the real price of something is. If you think that it is only going to take 6 months, you better wake up, folks. So for all the people that were thinking that this is going to be a soft landing coming soon, and I'm still seeing articles that, the Fed raises 75, we're done with this, there is going to be another 75 or more. I just don't think this is how it is going to play out. It is going to take 2 to 3 years to work all this madness out. That may mean the bottom does not hit, like I said earlier, for 18 to 20 months. I think we're in for a lot of crazy market action right now. We also have to be sensitive to the fact that the Fed operates on a certain class of data, and it's primitive. That data, it's pretty awful data they operate on. If you really break down how the government calculates CPI, it's an absolute joke. That's why I talked about the PCE. Government officials going around, what they do is they go around to local businesses and they ask people to do like surveys and stuff. And this is what I read about. You would think that this is, a day and age government would have, said to MasterCard, Visa, American Express, send me a feed in the following structured way so that I can actually have an absolute precise sense of inflation, because inflation really only occurs when goods or services trade hands for money. They didn't do that. They love surveys. It's unbelievable. It's not going to give you an accurate calculation. So, and you calculate what did that thing trade at the day before, and what does it trade for today, so you can get an absolute precise sense of it. Instead, we do these random samples, surveys. The next 5 or 6 months of the CPI will really be bad. Get ready, folks. 8 or 9%. Why? Look at rent, which has gotten out of hand. I work in this sector. It works on a 3-month lag. Oil is about $105 a barrel. Russia is trying to, break Europe by messing with the net gas supply right now. The German energy minister even said that this could be a Lehman Brothers moment. When you play all these things out, what you have is a massive runaway cost right now. What is our policy going to be with Russia and Ukraine going forward? How about another 100 billion? Let's give them another 100 billion. Are we going to keep sending them printed money? Are we going to work with China? Are they going to invade Taiwan? Are we going to develop our own chips? When they take Taiwan, are we going to fight with China? There's a lot of moving parts right now. And quite frankly, I don't have confidence in this administration. So until we figure all this stuff out, the bottom line is prices are going to continue to go up. Do what does the Fed, Jerome Powell, do? They have no credibility left, in my opinion. I've talked about this for a year. You have 8 or 9% inflation, prints. It's really higher. Our country is drunk on debt. All roads are going to lead to lower equity prices. Think about this. Most Americans have their net worth equity tied up in real estate. If we see a 30 to 40% correction in real estate, that could be a problem. Raising interest rates, inability to refinance your home, pull money out. We are at the beginning of something that is going to take a long time to work through. It is not going to be solved in the next 6 months. Like I said, you have some liquidity right now, 50 million in the bank, hold on to it. Certain sectors, put a little money in, artwork, multifamily, industrial, medical office buildings. From some people I'm talking to, I still believe in investing right now, but you're gonna have to think between the lines and be creative. But the key takeaway of this presentation is I'm listening to conference calls, and I listened to an eye-opening one, a couple of them from investment bankers. And when I read the general media, next 5 or 6 months, a couple more rate hikes, we'll tame this inflation. No. We just did an omnibus spending bill, which is atrocious, for $1.7 trillion, passed on a Friday night, with money that we don't have. Now we got to work through that money. You see how you got to work through that money through the system. And it's not going to happen overnight. There's $31 trillion. It's going to be a lean year in 2023, people. So I didn't like what I read, but like I said, in down markets, there's always opportunity, but you got to be very, very careful right now. Take care.